settled in the area for quite a while. It's starting to feel a lot like home. I have my wife Nancy, and I have been married for, I think it's 37 years this November. So got two sons. Jason is a banker here with Fifth Third Bank, and my younger son is in Huntsville, Alabama, with his bride Amy over there, and he works for a biomedical company that sells to the pharmaceutical industry. Don't have any dogs, don't have any pets, anything like that. But I do have three granddaughters by Jason, so that's my favorite hobby, is spending time with him. I think all of you know I love to get into the shooting sports, and basically devoting most of the energy, any spare time I have, to trying to develop my skills and understanding of the shooting industry and business. It's kind of a sideline for me, and I continue to grow that as much as my insurance business will let me do. The insurance business is rapidly changing over time. A lot of things leading up to, I think, some big and rapid change that we're going to have in front of us. And that's what I want to talk about, because as we go through the people that I talk to are calling me and they're saying, I'm fed up with the insurance that I have. And it's usually following a visit to the emergency room. And that is the point that they begin to understand what their copays and their deductibles look like when they show up to find out that their insurance is not going to pay anything for that visit that they took to the emergency room. And they say, well, why do I have this insurance? And in essence, insurance today has become almost a stop loss type of device. You're going to pay, those first dollars out of your own pocket. And a lot of the current plans don't even offer copays. It comes to where the doctor visits are out of pocket, the initial diagnostic tests are out of pocket, and it literally becomes a high deductible stop loss. Now, with the changes in the health laws, I'm starting to see new products come out of the companies, and so I think that's telling, because they're really researching this, trying to understand how are they going to continue to be profitable. First of all, they've been legislated by law that they have to return 85% of what they take in premium back in claim dollars, and that 15% that's left is all of their admin, all of their sales commissions, and everything else. And that's on certain types of products. So they've started to look at creating new categories of products. And really it's kind of going back, the new is going to kind of go back to the old. These are indemnity plans that say, rather than a fee-for-service kind of approach, it's going to be a schedule of payments that says if you have a procedure X, we'll pay X dollars. And it's not, anything goes. It's, it's not if you're, going to have all these different procedures, we'll pay that total amount. Some of them have daily caps that says if you're in the hospital, we'll pay $3,000 a day. Whether they did $10,000 or $200 in that day, we'll provide a benefit of $3,000 a day. So this is that indemnity plan, and at first I wasn't really sure about the wisdom of that particular approach. But what's happened with the new legislation, it's basically eliminated insurance companies being able to screen out an individual for pre-existing conditions, and it's also screened out basically any kind of underwriting delay to get into it. So what we're going to see is not a gradual increase in rates, but we're going to see a spike that says that traditional type of plan is going to go up quickly and significantly. Where you might be paying $75 or $80 for a young, healthy person's individual plan, it's very possible that that same plan could be $800 or $900 a month. All right, and so for those who have medical conditions and, you know, or maybe a little older, those plans are gonna be, you know, you could have an insurance bill of a couple of $100,000 a month for your medical insurance. And the reason is, the access to that is you can be literally in the ambulance, on your way to the hospital, pick up the phone, and dial in and say, I'd like to get one of those major medical insurance plans. And they say, sure, what's your credit card number, and we'll hook you up. So so that's the reason it's gonna go up, is because nobody's gonna have to plan or prepare. They're just gonna say, hey, we're gonna give you access, and if at the last minute you wanna buy it. And in the interim, you'll just pay this penalty along the way, you know, $95 a month or whatever it is for a penalty. So this alternate type plan, this indemnity plan, is gonna be a new type of product to help with, and it's gonna be focused on those little things, the emergency room, the doctor visits, that sort of stuff. And because they anticipate people, you know, coming into these exchange programs and picking up the phone and saying, okay, all of a sudden my appendix is ruptured, I'm on the way to the hospital, I need some, you know, different medical insurance. So I sat through one of the carriers the other day who took us through a really nice alternative type plan, an indemnity plan that goes through, and it's got very generous daily benefits if you do, you know, have a hospitalization, some inpatient, outpatient type procedures, and a pretty good schedule for those. And it did pay benefits. I mean, most doctor visits probably range between, I don't know, depending on how simple it is, maybe $50 to $150 would be a doctor's fee for a visit. And this plan offered options that would be a $75 reimbursement, up to, I think one of them had a $150 reimbursement for a doctor visit. So if you were to subscribe to this, when you went to the doctor, you would get reimbursed for, you know, those visits, and you would pay a negotiated rate to the doctor for that visit. So I think, you know, this is going to really require a change in mindset, because in the past I've talked to people that would be, quote, uninsurable by today's industry about these indemnity type plans, and it would just, as soon as you put that up, you know, just talk to the hand, I don't want to hear it, because you know, they said, I'm convinced I'm going to be able to find somebody that'll write the traditional insurance for me. Of course, I think they went on being part of the roster of the uninsured. As we move, I think what's going to happen is to try to, again, help people keep from paying too much for that insurance. We're going to see, now the group plans, it's not quite as clear how the pricing and everything is going to be affected by those as the individual family plans, but those are dramatically going to go up. Of course, all this is subject to our current political environment and, you know, who wins the tug of war on this thing, and it all could become a moot point. But, you know, there are definite issues that I think one way or the other, people are going to have to look at this pre-existing condition. You know, how do we help people once they have some sort of health condition, you know, continue to financially protect themselves? And that's really the key, is how can we help them protect themselves from some sort of catastrophic event? And pricing has really pushed most individual plans, like I say, to that. We're now, you know, it's not uncommon to have a $10,000 deductible, where, you know, just a few short years ago, you know, people would think that $2,000 or $3,000, you know, was a very large deductible. So the mindset, because of the pricing, has changed, and you know, the insurance companies have been boxed into the corner by this. You know, we can only retain so much profit and only pay so much to people to go out and sell these products. So that's, you know, that's kind of a snapshot of where I see things going, and I wanted to, I guess, identify and represent something else that I also do. In that this is not an insurance product, but I call them associations. It's a membership into a plan, and the one that I represent is called AmeriCard. A lot of insurance products have caps on them. The dental plan has a $1,500 cap, let's say, an annual cap. And if you need 2 or 3 crowns, you're going to go way beyond that. Root canals and crowns, and you've gone through it. I've been working recently with national restaurant chains, fast food type chains, all right, to help their employees. They don't make enough money to buy traditional health insurance. So this is a discount plan that helps those people save money on things that they're buying. Glasses, dental procedures, prescription drugs, that sort of thing. So it's a discount program that uses one of the largest health networks around. And the AmeriCard program has 3 different levels of offering, from a very basic suite that helps with prescription, vision, and dental, up to a premium plan that includes help with chiropractic services. It helps with pet medicines. You see, these, I didn't realize these pet pharmacies online, that kind of thing. But through the program, I've had a lot of people that have signed up just for the program, just to be able to reduce the cost of medical supplies for their pets. So there's a wide variety. A lot of people buy it for a lot of different reasons. It's particularly helpful in this audience of the restaurant, in that they offer medical plans, but the employees don't buy them because of the cost. This AmeriCard program, the cost varies from $12 to $18 a month, and can save hundreds to thousands a year in procedures they're going to have done anyway, or glasses they're going to buy, that kind of thing. So this has turned out to be very helpful and successful in these chains, and it's. I think as we continue to explain it to the HR directors, they're starting to catch on as to how and why it makes sense to offer this as a program. All right, so I've heard the chime, I've heard the gong, and I tried to cover most of what was asked, so let me take 2 questions, if there are.
From what you're asking or saying, it sounds like our medical insurance is going to go up. Is that?
You can count on it.
You can count on it. So what it was reported to be, is something to give insurance to everybody and make it cheaper for everybody. That's not happening.
I'm sure there is a way for somebody to explain it that might make it sound that way, but I personally perceive it as no. I don't think it's going to happen that way. Yes, sir.
Is this true also for group coverage as well as individual coverage? So if I'm trying to think of a large employer other than, Nally Cars, if they have a group plan for their employees, is that going to go up as well?
See, that was kind of my disclaimer in the middle of this, is I'm not as sure of the impact on the group plans. I believe that the cost is going to go up. I believe it's going to become more of a challenge on the employer to continue to make their contribution. And my worry is that we're going to see people start retracting from offering that as a benefit and putting people out on their own that have to come up with this individual plan. So I think the answer is it's not 100% clear how those group rates are going to change, because they've got a larger risk pool to be able to share that, and they've got more data, more information, so they may be able to manage that price a little better, but it's got to go up. I mean, the math just, it's got to go up. So